Today I want to speak to you guys about the power behind the Fibonacci retracement and extension tool and how you can use it and utilize it in the market to help you capitalize on the next move to the upside. So first things first, what is a Fibonacci retracement tool? That's basically a technical analysis tool that helps you determine support and resistance levels in the market, that also helps you identify where the market is first going to pull back to before continuing the trend as well. Now this is what a Fibonacci retracement tool looks like. Now these numbers that you see over here, these are the retracement numbers, and this is the extensor numbers. In general, we call this these numbers are used to determine where the market is going to pull back to before it continues, and these numbers tells you where the market is going to hit before it starts the next retracement. So what does that look like? So we know by definition the market moves in these waves, right? So when the market moves in these waves, so we're going to start over here. So we have this impulse. So if you want to measure this retracement to understand where the market is going to pull back to, all you do is you take your Fibonacci from the low to the high of the first impulse. Now this levels over here will tell you exactly where the market's going to pull back to. But remember what I said, that it helps you identify support and resistance levels in the market. Now these levels that you see over here, that would be the next target that the market is going to go back to before it starts the next retracement. Now these levels over here helps you identify your targets. These levels over here helps you identify where the market's going to pull back to. Now what you want to do is, after you measure an impulse in the market, you always want to look left and see which level lines up, which Fibonacci level lines up the best with structure in the market. Now what does these levels mean? Okay, when the market when the market retraces and rejects 0.382, it tells you that the upward momentum or the bullish or bearish momentum is quite strong. The 0.50 basically tells you that's a 50% retracement of this massive impulse. The 61.8, also known as the golden ratio, tells you that when the market hits that level, there's a high possibility that the market will reject that level as well. Now the 0.786 is the last Fibonacci level that you can expect the market to hit. If the market breaks this level, you can expect the market to continue lower. These levels would be, you would use these levels in the market to measure your take profit in the market as well. Now just to give you an example of what that would look like, so this is a daily chart on the Euro USD. Now first thing I want you to notice over here is I'm just going to remove that over there. So in fact, let me go all the way there. So in fact, what you can see over here, okay, is here you can see we're at a daily impulse. Now after an impulse, you expect a correction. So what you do is you take your Fibonacci from the high to the low of the impulse, and you always want to see which Fibonacci lines up the best with structure. So first thing we're going to look at is, does the 0.382 line up with structure? Yes, it does. We have structure there. That was the level of resistance that got broken and became support. Now we can also see, for instance, over here we got the 0.786 that lines up the best with structure. So these two levels is where the market is most likely to bounce from, and these levels are the levels that the market is more likely to hit first before starting a new retracement. So let's see what happens. So we can see there the market had now hit the 0.382, also the 0.50. We've got some structure there as well. So and then the market just went and hit that lows over there. So we're going to continue the concept as well. So the next thing we are going to do is we're going to wait. So now we have a massive impulse to the downside. Now after an impulse, we're going to wait for a green candle. So now we got a massive impulse to the downside. Now if you take your Fibonacci from the high to the low, like I said, these are called the retracement areas. The market needs to retrace back to one of these levels before continuing lower. Let's see, does the 0.38 line up with structure? Yes, we have this very important structure that the market had broken. Does the 0.50 line up with structure? Yes, it does. So we can expect the market to either hit this level or that level before continuing lower. Now let's see what happened. Okay, we hit the 0.382. Now we can expect the market to hit that target level before printing a new impulse. Okay, you can see the market had hit that level, and then you can see how the market started the next impulse. Now I don't want to keep this video too long, but that's just a simple concept on how you can utilize the power behind the Fibonacci retracement tool, and also understanding what the Fibonacci retracement and extension tool is in the market. Now, if you enjoyed this video, don't forget to leave a like and let me know down in the comments below which topics you'd like for me to cover next. If there is any page that you'd like for me to look at for you, I'd like to do for you that as well. And also don't forget to share the video just to help boost the YouTube algorithm, and I will be dropping more videos throughout the course of the week, some educational content and some market breakdowns. Thank you so much for your time. Thanks for the support, and have a beautiful week further. Cheers for years.